Hey, it's Mike. I am not an investing guru. I'm an average guy sharing my investment journey on the internet. In today's video, we're going to talk about the November TSLY return, or my income fund strategy. One of the main pillars of my strategy is to borrow money against my main portfolio and to invest in something that has a substantial yield that will cover the interest percentage or the margin and provide gain outside of that. So what my plan here is that I predominantly invest in TSLY. You could invest in S&P 500, whatever you want. And your main bulk of the account is the what you can borrow against. So my total account value is $195,000. And then what I invest in is I invest in a fund that sells covered calls on TSLY. Now they do it in very special ways. They sell synthetic covered calls. They buy a option, and then they sell it against that option. So you can see here that the yearly distribution yield is 61%. After the last yield was 6% a month. So I currently have an average cost 1581. So we're definitely taking an L right now in terms of the overall price. But I've only been investing in this for a couple months now, and a lot of positive things to say so far. I'm going to say that the payouts are legit. And especially if you look throughout the TSLY history, has just been going down and up and whatnot. And for the most part, this is actually a really good sign showing that the fund can perform well. With getting paid these high yields, it's very difficult to actually see the fruits of your labor until like years down the road. But we'll see how we do. So let's just go over some of the things here. So the nice thing about Robinhood is they have a 25% maintenance on this. I only use 5% of my total equity with margin. So for example, if I have $100,000, I will only use $5,000, but I have about $200,000. So I have about $10,000 out in margin. My total price paid for, my fund here is about $16,666. So there's about $4,000 of my own money that I used, plus whatever was used, paid for in distributions. And then the last payment here was $613.92. So TSLY paid out 0.58 cents or 58 cents a share. And that is a pretty substantial number. Like, if you had $100,000 invested in this, you'd probably be making 50 grand a year. So this is a very interesting product that's out on the market. So continuing on, one of the most important things I have here is this spreadsheet that I devised. So we are going over these November numbers. So total income fund value, I got these numbers yesterday, so there might be slightly off, but $12,171.36. Price paid $16,666.04. So we do have a little loss here. Now, the thing about investing in TSLY is it correlates with the TSLY share price, and TSLY for the last couple of months has not been doing well. One of the biggest problems with this fund is NAV erosion, but that will get combated once TSLY does start going up. And for the most part, I feel that the market's going to be going sideways, which I believe TSLY will as well. And this would be a great product to invest in at that time. So no November numbers. So let's highlight this here so we can see what we're talking about. Total income value, total margin amount, and then margin percentage from the actual amount is about 77%, but I probably should use this number. Yeah, whatever. All right, carrying on. So you can see that the last distribution was $613.92, which is a pretty hefty sum of money, knowing that you only have $16,000 invested in. So I do use a margin. So let's just go back to this front page here and let's look at our margin status. So our margin has a low risk status, and we'll look at the details. So I have about $115,000 of buffer. And then you can see that the interest rate here is 8%. Now, there are some people that will say, oh, you need to invest in JEPI and JEPQ and things like that. The only argument against that, I would say, is that, if this has an 8% interest rate that I'm borrowing money against, then the JEPQ and the JEPI wouldn't even be able to cover that. Whereas the TSLY can. TSLY pays out 6% a month, not 6% a year. So there's a positive with that, as well as the appreciation you'll get with the stock price. So expenses here. So the expenses are the Robinhood Gold as well as the margin interest. So Robinhood Gold is $5. The margin interest was $55.61. So one thing that a lot of people don't do when they invest in these type of covered call funds is we all sit down around the table and we just see how much income is coming in. We all laugh that we're going to be rich. The problem is a lot of people don't account for how much you're going to be paying in taxes, right? So to come up with my taxes on the spreadsheet, I did $613 minus the expenses and then times by 30%, which is probably what my tax rate is. And that gives me $165.99. And then, so we have that. Now, another problem with one of these investment funds, or these kind of like covered call funds, is the performance or the growth of your money. So Google, you get your return by them either doing share buybacks or, continually making money. If you invest in, say, like a half growth, half dividend stock, you're getting share buybacks, you're getting dividend payments, and that is increasing the share price. With these, you're not necessarily getting share price appreciation. You can, because they do put out 5 to 15% out of the money call options, but you can get price appreciation. But these, you're majorly making your bread and butter through distributions or dividends. So if you're getting the majority of your return through dividends and then you're not reinvesting anything back in, you're not gonna build a growing portfolio. So I ran some numbers, I did some mathematics, and if you reinvest back in 25% of your money, so 25% of the money you get paid, if you reinvest back in 25% of that, and you at least minimally get 10% a year with a NAV erosion of 10%, you still can increase your portfolio value as well as get paid more money in distributions. So I have calculated that number. And then what my net gain is here, before I, count all my eggs, I subtract all of this stuff to give me my net gain. So this is the net gain here that I can reinvest back into TSLY to buy more shares. I can buy other shares, or if I wanted to, I can take this money and pay for things. I currently am in the accumulation phase where I don't want to be spending any money on anything. So I pretty much am keeping this in my investment account, reinvesting it where I need be. But you'll see here that I invested 25% back into the fund. So $153.48. So if we go back here, we go to our history. So we had our payment and then $153.48. So that is going to keep growing my account. We're at a loss right now, but when Tesla starts doing better and better, we'll have that share price appreciation as well as the account growing and our total gross income growing. So this is the money you can do whatever you want with. So when you do your calculations, you have to account for that. So then I have two more columns here that I just want to discuss. And for the monthly yield, so I did this monthly yield off of this price right here. So if I'm yielding about 1.4%, about 1% every single year or every single quarter after my expenses and my reinvestment, that's pretty darn good. Like, I'm going to say that's a pretty darn good thing that we got going on here. And then the final thing I want to talk about is my portfolio boost. So what I do is I take this number and I multiply or do some calculations off of this number right here. So the other day when I did my calculation, I did it off of $201,000. I did this divided by 201,000, and that gives me a 0.12% return. So if you have enough of these, if you get 0.1% for 12 months, you're gonna give yourself a portfolio boost of 1.2%, which is actually a pretty good number, knowing that, say the S&P 500 returns 10% and you're getting 11% return because you're borrowing the money, and then after expenses and everything like that, you're getting this extra money. That is awesome. Like, if you squeeze out an extra percent return for over 30 years, that is a substantial amount of money. So this is just kind of a cool stat that I thought would be interesting to keep in mind here. But for the most part, just recapping everything. it looks like, we're getting good amount of payments. The payments are covering the margin. We're using margin to grow our account. We're only using 5% of our account in margin. And actually there is a better number here if we go to investing. So margin used, I'm at about 4.65%. I think a pretty safe number. We can even go up to 10% if we really needed to, but let's go down to the margin settings. So my margin maintenance number here is $80,000. Every so often it will fluctuate. There's one point it was like $67,000. But essentially, if I wanted to buy $10,000 more of TSLY, because it is a 25% margin percentage, it would only tack on an extra $2,500 on here. So something worth noting, but I do think I could probably go up to 10%. But what I told myself is I'm going to be holding all of these for about a year before I start increasing any margin percentages used. So yeah, that's it. If you have any questions, definitely let me know. But this is kind of where we're at now. And, hopefully let's get these payments, make some money. Let's grow some income for our families and ourselves, and let's get this bread.